So good evening and welcome to everybody attending my webinar this evening. So I'll just get started. All right, so my webinar this evening is a Forex tutorial for beginners. So whether you're used to trade before, or let's say you're just new to FX trading and you want to learn a little bit more, hopefully this webinar can give you a little more insight on understanding what is the FX market about and understanding a little bit more on the product. So my name is Jeremy Fu and I'm an account executive with Phillip Futures, and I'll get started on the webinar. So firstly, a short disclaimer. So just to inform you that all the information here is for educational purposes and does not give any recommendation for any trades. So a list of my agenda for today. So roughly a few things of what I'll be going through. So what is Forex? Why you should trade Forex? Some of the key features of Forex trading. A few of the order types that we have on MT5. What is swaps and interest? A little introduction to fundamental analysis and a few of the economic factors that drive the Forex market, as well as how to get started trading on our MT5 platform. So firstly, what is Forex? So Forex actually stands for foreign currency exchange. So just imagine that you're going to a money changer and you want to exchange your money. So as you can see from the picture, you can see a guy that's exchanging his US dollars for euro. So this is actually what Forex is about, and therefore it's always conducted in pairs. Therefore, there is the exchange rate. So you cannot do a single currency pair. If you do a single currency, then there wouldn't be the exchange rate. Always has to be conducted in pairs. So this is an agreement entered to buy one currency by selling the other at the agreed rate or the exchange rate. So just to note that the Forex market is actually over the counter, or OTC as they call it. So that means that all transactions are conducted electronically rather than on a centralized exchange like SGX. So why should you trade Forex? So Forex is actually a leveraged product, which means that the amount of money that you must come up with is actually much less than the amount that you're actually trading. So just imagine with let's say you have $1, you can trade up to 20 times of currency, and that's what they mean by leveraged product. So the leverage that we're actually offering is 20 times. So like I give the example early on, with $1 you can trade up to $20 worth of currency. So the Forex market is a high volatility, high liquidity market. So if let's say you are trading the major currency pairs, you shouldn't have a problem having your order filled. If let's say you put a stop loss or a take profit, you shouldn't have the problem of not having your order filled, or your take profit or stop loss orders not being filled completely. So there's a average about 5 trillion traded daily due to a leverage based product. So this actually inflates the number that's actually traded on the volume. So Forex is actually a buy direction, which means that you simultaneously can hold a buy and sell position. So unlike stocks, you must buy the stock and then hold it, and then you must have the stock before you sell it. So actually for the FX market, you actually can short sell without having a buyback period. So you actually can short sell and actually can hold your short positions for as long as you want. The Forex market is running 24 hours, 5 days a week. So the market opens at Monday 5 a.m. and it closes at Saturday 5 a.m. So depending on the currency pair that you're actually trading, um, during the day actually see which time your currency actually gets more active. So usually for the Japan market, it's more in the morning. For the Aussie market, it's also in the morning. The Europe and the European markets get more active in the afternoon, and then the US gets more active in the nighttime. So our MT5 currently is also offering a 0% commission, and then we only charge you on the spread, which means that every time you execute a trade, there's no additional commission besides the spread or the bid or offer price, as some of you might know it. So should you buy or sell? So if you predict the current market price or the exchange rate to rise, then you should be going long or doing a buy. And if you do buy and the price rises, and then you'll be in profit. If you predict the market price to fall, you should be going short or you should do a sell. And if you sell, then the price falls or the market price falls, exchange rate falls, then you'll be in profit. So some of the key features of Forex trading. So as I said, Forex is always conducted in pairs. So you always have one base currency and one counter currency. So this is actually the picture that you see is actually a price quote extracted from our MT5 platform. So for the euro dollar, you actually can see the spread as well as the low and high for the day. So how do you calculate one pip? So if let's say you were trading the euro dollar and you have you see that the current exchange rate is 1.1377. So we look at the fourth digit after the decimal place, so that will be the 7. So if the 77 becomes 78 or the 77 becomes 76, that will be equivalent to 1 pip. The 1 pip is actually determines your profit or loss and depending on the volume that you're trading. So I'll cover that in my next slide. So for the other example, if let's say you're trading the dollar yen, if let's say the exchange rate is 107.36, if the 36 becomes 37 or 36 becomes 35, that will be 1 pip. So continuing on the key features of Forex trading. So for FX trading, we actually have three different sizes, regular, mini, and micro. So regular basically means 100,000, the mini is 10,000, and then the micro is 1,000. So the margin that you need in your account to open a regular lot size of FX trade would be 5,000. So that's how you get your 20 times leverage. Because if you take 5,000 times 20, you get 100,000. So for the mini, the margin will be just divided by 10, so about 500 US dollars. And then for the micro size, $50 US dollars. So per pip. So earlier on, if let's say the exchange rate was 1.1377 as my previous slide, and if let's say you went long and the price became 77 to 78, if you're trading on the regular, you'll actually be earning about $10, and then the mini would be $1, and then the micro will be 10 cents. So on MT5, actually the regular would be determined as 1.00, and then the mini will be 0.1, then the micro will be 0.01. At my end of my presentation, I'll actually be going through just basically how to place an order or enter into a trade, and then you'll be able to see how you're adjusting the sizing depending on your risk appetite or the volume that you actually want to trade. So all in all, the leverage is about 20 times, and that's actually the minimum and maximum that we're actually offering. We don't actually offer anything less or anything more. So a few of the order types that we have on MT5. So apart from the market order, we have 6 different order types. So the first being exchange execution basically means market order, which means either you want to buy or sell at the current market price. So if let's say you're covering other order types, I'll just go into it. So I just drawn a few arrows for illustration purposes so it's easier for you all to understand. So firstly for the limit order, so firstly the buy limit order, just imagine the red dot being the current market price. The limit order would be similar to like a U-turn. So just imagine that if let's say the current market price is $1, you actually be queuing to buy at maybe 80 cents or anything below $1. And then for the sell limit, similarly, it's just a mirror image or reverse. So if let's say the current market price is $1, you'll be queuing for something anything above $1, maybe $1.20 or $1.50. And then if it hits the specific price that you want to sell at, then they will do a sell order at a specific price that you input. So for the buy stop and sell stop orders, just imagine a straight line, not a U-turn, but a straight line. So it's the one on the left-hand side, buy stop. So same, the red dot being the market price. If the price rises, it will do a buy order for you, and then you're hoping that the price will continue to go up. So similarly for the sell stop, it's exactly the same, just in the reverse. Current market price is the red dot. If the market price drops, they will open a sell position for you, and then you hope that the price will continue going down. So for the buy stop limit and the sell stop limit, it's a bit of an unusual order type. Usually we see more people using the first 4 order types. So this is actually you have to input 2 different prices. So usually you will be filled in a range. So you actually can see from the arrows that the price goes up, comes down, it will make a limit order for you, then the price will continue to go up. So similarly for the sell stop limit, it's the same thing. Yep, it actually combines the uh, buy stop and buy limit orders together. So swaps and interest charges. So if let's say you are trading FX, you'll definitely incur these swaps or interest charges for most of usually for all of the brokers actually. So how we count the day at 12 a.m. for FX market is actually at 5 a.m. So if actually you cross this 5 a.m. Timing, you actually incur these swaps or interest charges. So this is actually the interest differential between the currency pair that you're trading. So if let's say you're trading the euro dollar, it's actually the interest differential between the euro and the US dollar. So usually against the US dollar, usually since the US dollar has higher interest rates, usually you'll be earning swaps if let's say you buy into the US dollar. So it's actually not how long you hold your position, but the timing in which you hold. So if you hold over 5, you'll be incurring these swaps. So I have two examples for you. Firstly, the euro dollar. So if let's say you do a buy position, which means you're buying euro, selling US dollar, for the regular, you have to pay about $11 per day. And then for the mini, you just divide by 10, about $1.10 per day. So if let's say you do a sell, which means you sell euro, buy US dollar, you actually be earning swaps. That means a positive swap. So about $5 per day. And then for the mini size, about 50 cents per day. So you just divide by 10 again if let's say you're trading the micro or the 1K size. So it'll be about 10 cents and then 5 cents accordingly. So if let's say the US dollar in reverse is in the front, so dollar yen pair. So if let's say you do a buy for dollar yen, for the regular lot, you'll be earning about $4 per day. For the mini size, about 40 cents. And then for the sell, so if you're selling dollar, buying yen, you have to pay about $10 per day. And then for the mini size, will be about divide by 10, $1 per day. So I'm actually about halfway through my presentation. I actually take a short break to maybe take some questions from the audience. Feel free to type in the question box if you have any questions so far on what I've gone through. I'll read out the question from the audience as well as try to answer some of your questions. So it's great. Welcome back. So it's great. We actually have some questions from the audience. So actually, I'll read out the question and then after that, I'll reply. So the first question is asking, so for USD SGD, when I buy, I am buying USD and selling SGD. Yep, that is correct. So actually, when you do a buy, you are simultaneously buying US dollar and actually selling Sing dollar. So we have a second question. Is your margin fixed? So yes, our margin is actually fixed. You can't actually adjust the margin. It's actually simulated at 5% for all the currency pairs that we actually offer. Okay, I'll just answer one more question. So from the audience, so the question was, how do we know whether to buy or sell? What report should we follow to know the buy or sell? So I'll actually be covering that in the next few slides. So you should buy or sell depending on which currency you actually think is going to appreciate against one or the other. Hopefully I'll jump right into that. So right on. Okay, so what is fundamental analysis? So fundamental analysis is actually the analysis of economic, political, and social factors in the country. So these economic fundamentals drive the country's currency in the long term and as well as the short term. So some of the things that you might have read up about in recent news or in the past year that has occurred, which definitely affects the country's economy. Political factors. So last year we had the UK's Brexit. So this definitely took the British currency for a bit of a roller coaster ride, up and down, depending on what happened and how the whole Brexit thing transpired. As well as the things you can look at would be economic data, and this would definitely signify the strength of the country's economy. So you can look at non-farm payroll or GDP, like gross domestic product. These data definitely affects the country's economy and therefore affects the currency simultaneously. So some of the natural disasters that will affect, so like last year we had the Australian bushfires that affected the Australian economy, as well as currently we have the COVID-19, so the global pandemic that's definitely affecting the world's currency, and we actually see many countries actually stepping up to adjust and to actually try to cope with the virus. So the third thing to note is the sustainability of the growth. So if let's say a country or currency is expanding, how sustainable is the growth in the long term or in the short term? Then fourthly, we also have future monetary policies or interventions by central banks and governments. So actually, due to the COVID-19, we actually see many central banks pushing up their interest rate decisions and doing unexpected rate cuts to help to cope with the slowdown of the economy due to the virus situation by the central banks. So lastly, which country's economy is growing and which country's economy is slowing? So I think this is a partial answer to the question whether you should buy or sell. So I use the euro dollar for example. So if let's say the euro economy is expanding or growing and the US economy is contracting or slowing down, then the general exchange rate that you see will increase due to the euro economy increasing. So second scenario, if let's say the euro economy is slowing down or contracting and the US economy is expanding, you would see the exchange rate decreasing. This is because the US dollar is actually appreciating against the euro, therefore the exchange rate will come down. So the last scenario, if let's say both economies are slowing down, the euro economy is slowing down faster than the US economy. Therefore, we will overall see the exchange rate decrease because we actually see the euro drop against the US dollar, or the US dollar would not be dropping as fast as the euro economy. So some of the major economic factors to take note. So these are a few things that will definitely affect currency and things that you should look out for. So firstly will be interest rate decisions by the central banks. And then for the US data, non-farm payroll on the first Friday of every month, inflation rates, GDP or gross domestic product, producer price index, consumer price index or CPI, retail sales, trade balance, ISM report. So all these data that is coming up for the countries definitely will affect the interest rate decision by the central bank, and they will know whether the country is the economy is expanding or is it contracting. So we use this economic data, the economic data that comes up or is presented onto websites and all that. There's always a previous, forecasted, and the actual data that's coming up. So we actually compare this previous, forecasted, and actual data of a certain currency against its base or counter pair. So this is actually not to used to predict the market, but to actually to provide insight into the growth or the contraction of the country's economy, and this would in turn contribute to the interest rate decisions by the central banks. So what fundamental traders actually do is actually trade on probability based on the data provided by the analysts. So fundamental traders actually use the previous forecasted data to place trades. So if let's say the analysts or many analysts feel that the data will be strong or positive, let's say for non-farm payroll, then statistically the currency should rise after the release of the economic news, and therefore you can position yourself. If let's say you think that the US dollar is going to go up, therefore you should maybe buy into the US dollar, and therefore if the US dollar rises, then you'll be in profit. So central banks and interest rates. So besides economic data, central bank and interest rates definitely affect currency, and every country has their own central bank. So central banks actually implement monetary policies for a country or group of countries, and these definitely affect the forex market because the interest, whether they uh, do an interest rate hike or interest rate cut, it will actually show the world how healthy or how much growing is the economy. So they actually control the interest rates. So central banks will assess how healthy the economy is and will either hike or cut interest rates accordingly. So some of the common terms that you might have heard before when they do an interest rate decision, one would be the hawkish or dovish view. So hawkish basically means that the central bank's intention to increase interest rates due to concerns that the economy is growing too fast. This actually is a good thing, which means that the country's economy is actually doing well. The other one would be a dovish view, which means that the central bank's intention to cut interest rates due to concerns that the economy is slowing down too fast. So this actually shows that the country might be slowing down or contracting, and therefore they need to cut interest rates to help with the slowing of the economy. So some of the central banks to take note. So firstly, the most important would be the Federal Reserve or the Fed. That would be the central bank for the USA. Then secondly, we have the Bank of England or the BOE, Bank of Japan, BOJ, European Central Bank, ECB, Reserve Bank of Australia, RBA, Reserve Bank of New Zealand, RBNZ, Swiss National Bank, SNB, and some of the Singaporeans would definitely know Monetary Authority of Singapore, the MAS, which is the central bank for Singapore. So how do you source for economic data and how do you become a fundamental trader? So firstly, you want to take note of important events that occur in the week. So this is actually an economic data table, which actually I send to my clients on a weekly basis, and this actually highlights the important data coming out for the week. So this was actually the economic data table for the first week of March. So some of the more important things are highlighted. So maybe I just go through a few. So for the Tuesday, March 3rd, there was the the Bank of Australia interest rate decision. So it was largely expected for them to actually hold interest rates, but in the end they actually cut interest rates due to the COVID-19 virus, and therefore because tourism and all that will definitely be slowing down the economy, and therefore they cut interest rates. The other one that was actually quite a huge impact was the OPEC meetings. This is actually the oil meetings that was conducted. Um, and this actually caused the oil prices to actually crash due to the disagreements that they had between Russia and the Saudi Arabia side. And it definitely affected oil prices. So if let's say you're trading crude oil, this is one thing that you might want to look out for the week if they have any meetings. And then last but not least would be the non-farm payroll data coming out on the first week of March. So as I said earlier, the non-farm payroll is on the first Friday of every month for the previous month's data. So if let's say the data was weaker than usual, for example, you can see that the previous data was 225K versus forecasted at 175. So if let's say you wanted to be a fundamental trader, so if the data was predicted to be weaker, therefore the US dollar should be weakened, you should have gone maybe a short on the US dollar. So some of the news and tips that actually I provide for my clients. So the first one on the left would actually be sending a technical advice or technical view if I identify a good opportunity in the market. It's not fully guaranteed, but I do hope that it was my view and hopefully that the market will move in the favor. So actually, as you can see, I actually do provide a entry and exit point for you, and you definitely can adjust that to your own risk appetite or trading style. So the second would actually be, you can see that I actually highlighted the non-farm payroll data that actually came out earlier this month. So I will usually inform a few hours before the high impact news comes out. So if let's say non-farm payroll, I'll try to advise a few hours before so they actually can prepare and what to expect. Is the data expected to be good, or is it expected to be not so good? Okay, so for the third one would be the economic data table, which I showed you earlier on. So it will be sent on a weekly basis, and then what to look out for the week. And then last but not least, the fourth one on the most right hand side is actually a news update. If there's major market movements the previous day, I will usually update my clients on what actually caused the big move in the market and actually what to look out for. So I actually send all this by WhatsApp to my clients, and if you're any interested, please do contact me about this. So besides the news and the information that I do provide to my clients, if you would like to read up or keep updated on more news on your own, do feel free to do so. There are lots of free websites that you do not need to pay for to obtain information or some of the analyst views or what they think would be happening or driving the market in the near or short term. So the first one on the left hand side is actually our Phillip Futures news update. We actually provide this on a daily basis sent by email. Other than that, we have investing.com. They have news updates, and uh, they have views from like well-known worldwide analysts like Katie Lian and much more. Secondly, will be CNBC. They give free news articles. Bloomberg, you have a few free articles every month. Then FXX would be FX Street, and then Daily FX would be another website. They have like many different news articles and free views by analysts that you can go and read up on. It's always good to obtain more views from different sources so that you get more trade confirmation and definitely a better understanding of what's happening in the market for. And then if let's say you have more analysts thinking that the market will move in a certain way, it's probably going to be moving in that direction if more and more people or analysts come up to say that the market is going to move this way. So some of the few things to consider. So if let's say you do decide to start trading or investing in any product, what you want to do is know and understand the product first before you invest in it. So after you know the product, you want to choose your right broker. If let's say you want to trade on investment products. So firstly, you want to know that your funds are safe, and this is actually due to the fact that we actually Phillip Futures is actually a MAS regulated broker, which means that your funds are segregated and therefore your funds are safe with us. You don't want a broker that charges you on every time you deposit or withdraw funds. So we actually don't charge clients on depositing or withdrawing funds. But if let's say you do want to do a wire transfer or a telegraphic transfer or TT transfer using other currencies, there will be other charges. But for Sing dollars, there's no charges on deposit or withdrawing of funds. So what you want is a broker that's actually contactable at all times and actually gives you some support or help that helps you along the way. So not all brokers actually give a one-to-one support that actually can give you advice and tips, but I will actually be giving you that kind of support or help. Last but not least, whenever you're trading, you want a reliable and stable platform. You don't want a platform that is always crashing or always lagging or giving you many problems. You want a stable, good platform. So our MT5 platform is actually a really good platform. There is usually hardly any lags or crashes on the platform. Um, Lastly, you should understand the risks when trading let's say for a FX product. It's more of a high risk product which needs proper risk management. So you want to understand the risks involved before you jump into it. And then last but not least, actually I will try to help develop a trading strategy that is suited for you depending on the currency pair that you're trading and your trading style. So how to get started? So what I actually propose is actually try to get started on a demo platform first. This would actually be familiarizing yourself with the platform as well as roughly how to enter and exit trades. If let's say you are confident on using the demo platform and you are interested in getting started on doing FX trading, the second step would be actually opening a trading account and then get started on a live account but with small volume and with proper risk management. As the demo platform is actually using fake funds, so you don't actually see many people not actually using proper risk management, which means putting a proper stop loss. Because FX product is actually a leverage product, which means that it's different from stocks, which means that the amount of money that you actually can lose is not your capital. It actually can be more than your capital. So the stop loss will actually prevent you running into very heavy losses. Um, so the fourth step will be teaching you how to incorporate simple fundamental and technical analysis in trades. So technical analysis is actually the other analysis that FX traders use. I'm actually not covering that in my this webinar, but if let's say you are interested to get started on a little bit on technical on how to input that in your trades, do contact me about this. These are the two analysis that FX traders use, fundamental and technical analysis when they do trading. Last but not least, understanding and fully utilizing fundamental and technical analysis in your trades. So as much as I can coach you, but ultimately you should not rely on me solely for the whenever you want to place a trade. So what I aspire is that that you would develop a market view of your own or how to read the market on your own, depending on which currency pair you're trading or maybe a certain website that you like to view on that you feel is quite reliable. And I'll always be around for you to actually run your views by me for confirmation or share an interesting article and view, and then it will be much more comprehensive in that way than just looking towards for me for asking for my view on which market which way this direction the market is actually moving. So actually, so these are my contact details. My name's Jeremy again. I work with Phillip Futures. My handphone number is there. My work phone is also there. My email is also there for you to contact me. Otherwise, I'm at the office. We have our office at North Bridge Road or Raffles City Tower. Um, so some of the things that I do provide for my clients, so economic data table weekly, so sent by WhatsApp as I showed you earlier on, technical views and advice on trades by WhatsApp, as well as coaching for my clients one-to-one. If let's say you want to meet up to go through a maybe a certain indicator or roughly just in any informal chat about FX, I'm always welcome to speak to you, and I'm usually always contactable even after office hours, as I know that the FX market is still running. So apart from the help that I actually do provide to my clients, Phillip Futures actually does also their own. They have their own help for their own clients. If let's say you want to have more views or more trade confirmation. So the first one is actually a technical view. It's actually called the Trading Central Research Portal. So as you can see, they actually do analysis on about 30 different currency pairs, some intraday, some short term, and some mid term. So this is available on MT5, or otherwise they will send their reports by email, uh, at least once a day, sometimes even more. So as you can see, they have a dollar yen example here. So they're basing it, so this view is basing it on the 30-minute dollar yen chart, based on Bollinger Bands moving average. Then you have your RSI below. So their view for today is more intraday, that the currency is going to drop to a certain level, and where you can put your take profit or stop loss levels as well. So as I said earlier, we have the daily commentary update. This will actually be a news update sent by a email to you at least once a day, sometimes even more if let's say there was major market movements in the day, and this will actually keep you updated on the news that is occurring and what to look out for in the market. Lastly, we have the Autochartist. This is actually a pattern recognition software available on MT5, only on the desktop actually. So it's on the desktop, and they will actually you actually can help you recognize the pattern, give you some rough idea which which direction the market is going to move. So if let's say you don't want to use the recognition software or tool on the desktop, they actually do send FX reports by email. As you can see on the left hand side, this they will actually send by email 3 times a day. First for the Asian session, second for the European session, and then lastly will be the US session or night session. Roughly, they will identify roughly whether it's an ascending triangle, descending triangle, channel up, channel down, what's the trend in the market, what to look out for, and give you some take profit or stop loss levels as well. Um, Besides the help, we do still have our refer a friend promo. So this is actually let's say you have an account with us and you want to refer a friend, and your friend starts trading at least and does at least one lot within 1 month or from the account activation date. You as the referral will actually get $88 Sing dollars, or for if let's say you open an MT5, you have an MT5 account, that'll be 66 US dollars credited your account. So besides FX products, we do have a very wide range of futures products that you actually can look at. Mainly, the more popular ones would be the indices. On the US indices now is very popular with the current market volatility, Dow Jones, S&P, NASDAQ. We also have other commodity products like gold, crude oil products that you can look at. So if let's say you are interested to look into some futures products, do feel free to contact me. So a few of the, if let's say you want to open an account, the requirements for Singaporeans would be, let's say your NRIC. For foreigners would be your passport details, your employment pass, and the minimum deposit for funding would be 500 Sing dollars to fund your trading account. I'll actually, at the end of my presentation, I actually go through a little bit on how to actually you can go about to open your account online. So as you know that with the virus situation, some people might not want to meet up, or we have advice that to stay at home. You can open a whole trading account on our website online, so you don't need actually to come down to actually do the account opening. Um, yep, I'll just show it to you in a minute. All right, so if you go to our website, www.phillipfutures.com.sg, you'll be brought to this home page. Top right hand corner, you have an open an account, so just click on that. So for Singaporeans, the easiest one would be to open with My Info. This would be, you need to require your SingPass, and then it will be much better to log in, and you don't have to do a video verification. If let's say for the overseas investors, if you want to open an account with us, or if let's say you don't remember your SingPass and you do decide you need to do a short video recording of yourself for verification purposes, and then you can do the account here. Just click on this, follow the steps. It should be rather straightforward. If you run into any problems, you can call our help desk, or you can contact me also. If you like my presentation, or you do like to receive the tips from me, do indicate my name on the third page of the online account application. As you can see from the photo, do indicate my name, and then they will actually tag me. If you don't actually indicate my name, they'll actually just reassign a randomized broker to you to assist with your account. And if let's say you do so, please inform me once you've submitted your account application. I'll actually do a platform demo for you. I think there was a request from the audience saying that they would like to see a short demo. So basically, this is our MT5 on the desktop. The mobile version is the same, just that the portions of the charts and price feeds are actually into different tabs. So if you just go to the App Store or Play Store on your mobile, type in MT5, download it, you can able to try the platform and see how you get along. So basically, this is the desktop view. Firstly, you can see here will be your charts. So I have the 4-hour euro dollar chart up with simple stochastic at the below. As you can see, you actually can hold up a lot of different tabs for your chart. So if let's say you're trading many currency pairs, you actually can have a lot of different charts, and you actually can save the indicators onto your chart. So that's actually a quite good function. So just the left hand side will be your price feed. So you can just scroll up. If you have a lot of currency pairs, you can actually add as many currency pairs as you like. We have lots of currency pairs. So either you can do a view like this, or you can do this a view, which you can see the low and high. As you can see from my PowerPoint slide, this was roughly how it looked like. Yep. And then at the bottom here, you actually can see your open positions. So let's say for this one, dollar yen, sell one lot at 106.521. So current price is went up, so therefore it's in slight losses. So for the swaps, if it's a negative number, as you can see here, this would mean you need to pay. So if let's say I close off this trade, the negative swap will be added to my losses. So how to place a trade? So if let's say I have a dollar yen, if I want to place a trade, if let's say I press a buy, the order window should come up. Exchange execution will be market order. Otherwise, if let's say you want to put a certain order, maybe a buy limit or stop limit, you need to click pending order. So this will be, you can input the different order you want to do: buy limit, sell limit, buy stop, sell stop as well. So secondly, we'll be implementing a volume. So this is when I said the one will be determined as 100,000. So they actually put it here. So if you change it here to 0.1, for example, they're actually showing that you're actually buying 10,000 worth of US dollar against the yen. So the exchange execution or market order, that means you say buy or sell at this price. So this is actually the bid or offer price. We try to make it easier for you all, so that if you're buying, will be on the right hand side, selling price will be on the left hand side. So I'll just go through. If let's say you're doing a pending order, you can input a price that you would like. Maybe for example, if let's say the market price is 106.85, maybe I can put 106.55 IQ to buy at this price, and then you can input your stop loss as well as your take profit. Place the order. It should come up right here. That you can see the order here. So still pending. So once it's executed at the price, it will move up to open position. So currently you can see dollar yen to buy at 106.55. Yep. So this is roughly how the platform demonstration would go. Okay. I'll just finish up on a platform demonstration before I take some questions from the audience. So Basically, if you want to insert your indicators, it'll be right here. You can indicate different indicators. Otherwise, right click and then you can change your time frame to maybe a 1 hour or maybe a daily chart. All right, I'll take some questions from the audience. I'll leave you with this slide. If let's say you have a handphone and you want to, please, I would really appreciate if you did some feedback on my webinar so that I can improve on future webinars, or roughly what more you want to see, what you want to hear. I'll leave my contact details there as well. If let's say you want to contact me, whether to have a chat or we can have a talk about forex trading, do feel free. I will take some questions from the audience now. Yep. So the first question I have from one of the audience is, what is your firm's charges for forex trading? So, as I said, our MT5 is actually running on 0% commission. We don't actually charge you on any trades that you do, only on the bid and offer price, or the spread as they call it. And then if let's say you had a negative swap, depending on the currency pair, the swaps charges would be the charges that you actually be incurring. But other than that, there is no additional commission charges on the trade. Or if let's say you don't do any trading, we actually don't charge you for actually keeping the account open. I hope that answers your question. Um, So another question that another question that I have is actually, someone asked, the example on USD yen and euro dollar has negative interest. What about USD Sing, and how do you calculate the swap? Okay, so actually how you calculate the swap is actually based on the interest differential. So if let's say you were to do an equation, it will be, let's say, the interest differential. So if let's say for euro dollar, the euro actually currently has a negative swap, negative interest rate. So you actually take the negative plus the positive times the size that you are trading, divided by the number of days that you're actually holding. So that is actually how they calculate the swap. It's actually a very pretty complicated formula. If let's say you do like to hear about like how the different swaps for different countries, you can contact me to ask me. Depending, yeah, US dollar usually has higher interest rate. So usually they would have a positive swap if let's say you're buying the US dollar. So another question that we have is, what are your consultation hours? So actually, I know that people are actually working, so actually I can meet you after work. I actually operating during office hours and also contactable after office hours. So if let's say you were working and you want to have a chat after work, maybe if you want to meet me at like 7 or 8 p.m., that is fine as well. Because yeah, I know people are working, so yep, I can actually meet you after work if you are interested. Another question is, how do you calculate margin call? So actually, if let's say you know about the margin call is, let's say your account drops below 100%. So if let's say your MT5 account drops below 100%, your free margin should actually be at 0 or negative. But we will not actually close off, and there won't be actually a top-up period. For us, for MT5, if only your account drops to 20%, then we actually liquidate some or all of your position. This to prevent your trading account going to over loss. So, but if let's say your account drops below 100%, they will actually drop you an email. They will also notify me, and I will actually try to inform you along the way if let's say your account might be at risk of having a liquidation. I hope that answers your question. Okay, so there was another question from the audience saying asking about roughly what is the global impact of the COVID-19. So as we saw in the last few weeks, we actually saw many central banks actually coming forward and doing an unexpected rate cut to try to cope with the COVID-19 and the slowing down of the different countries' economy. So this has actually affected the FX market quite heavily. Um, and we actually see because of the virus situation, tourism and all that will actually be slowing down. Therefore, countries' economy will be slowing down. Therefore, I think they felt the need to step up to do a interest rate cut to try to help businesses and the economy to um, get affected by the virus. So um, there's actually a global impact of the virus, and I think it should stay, or it will continue to affect till this problem has been solved. Yep. Okay, so there's another question. If I use the demo MT5, is the swaps the same as the MT5 live account? So, yes, it's almost the same. So, it'll be quite good if, let's say, you're using the demo account to actually see how much swaps that you actually be paying. You actually can see quite easily on the mobile or on the desktop version whether you will be paying swaps or earning swaps. So on the mobile, if let's say you have the trade tab, you tap on your open position, it should drop down a little bit, and then you can actually see your stop loss, take profit, as well as the swap. If let's say it's a positive or a negative swap. Yep. Hope that answers your question. Okay. I have one more question. So, uh, amidst the COVID-19 pandemic, what is your view on dollar Sing, dollar yen, and euro dollar? So generally, we actually saw uh, when the Fed first stepped up earlier on to actually cut rates yesterday morning or Monday morning, we actually saw the US dollar drop to a certain extent. Now we actually see it appreciating against the currency pairs that you're actually saying, dollar Sing, dollar yen. I'm sure if you would know, the Sing dollar has dropped quite significantly against the US dollar. So the US dollar has appreciated against the Sing dollar quite significantly. I think due to the pandemic, the COVID-19 virus has affected the uh, currencies globally. Euro definitely down, Sing dollar definitely down, and we should see it continue affecting the currencies until the problem has been solved. Okay, so there is a question saying, can you show me how to open a demo account? So maybe I would just do that quickly. So on our website, if you go to the homepage www.phillipfutures.com.sg, under investors, we have request a demo. Here, click on MT5 or Philip Nova is our futures platform. So if let's say you like a futures platform, then click on Philip Futures. Then here is where you would do your MT5 demo registration. Fill up the here. If let's say you would like me to follow up with you, do indicate my name under Philip Futures account, so you can type my name here. That would be useful, and then I'll follow up accordingly with you regarding the demo account. Uh, yep, they would send the login details to your email. So do provide a valid email address. Yeah, then they will send a login to there. I think we have run out of time. Thanks everyone for attending the webinar. Hopefully it was a good insight to um, learning a little bit more on the FX, on a FX product itself, and roughly what drives it fundamentally. Yep, and I'll see you guys again soon. Do feel free to contact me if you have any questions. That is my contact number. I will leave that up for you guys. Otherwise, thanks.